Hi folks, it's the first weekend of October. We've just seen off the third quarter of 2022 on Friday, end of the month, end of the quarter, first weekend of October. Oh, I need to show you where do I need to show you? FTMO challenge. So where am I? This is what I want to show you. Okay, so I did the challenge, started on the 1st September, ended on 30th September. I didn't do a lot of trades, to be fair, not really. Right, here we go. So I did the minimum 10 days of trading. I was really swing trading this. I was position trading it, basically doing exactly what I was, the signals that I provide every day. Max loss was okay. Got to 9,000. That was the maximum. Profit target was achieved. So that was okay. But on one day, I don't know what day it was because I wasn't even actually paying attention. But my P&L swung worse than -5. So I had a bigger loss than $5,000. The P&L swung into $6,271. My stop losses weren't triggered, but I had a lot of positions on, and I obviously wasn't paying enough attention. So the loss was exceeded, so I failed the challenge. Maximum daily loss has been violated. Okay, so there you go. You've got to be very careful. They've got very strict rules, and I think that's terrific. The strict rules are really important. It does make sure that you keep your discipline if you have problems with discipline. Clearly I do, because I overswung the P&L by 1.2%. So there you go. I messed up. I'll have to start all over again. I was actually too kind of busy with my own trading account. Not a big trading account. I put £7,000 in to start trading a little bit over the summer, after the summer, and I've just been doing the trades that I normally do. That I sent everyone on the trade sheet in the morning. So I'm up nearly £8,000 just over the past week. I've turned 7 grand into sort of what have I got? 14 and a bit. So doing all right. I'm basically short stock markets. I'm short gold. Oh yeah, gold really caught me out. As you can see, two of my gold positions here, and I've got a lot more than that. They're down quite a chunk. I'm doing all right with the rest of the stuff. Long the dollar. I'm long dollar CAD. I've got another long dollar CAD position. Oh, both. There's the two long dollar CADs. There's the short euro position. Just got it getting into that on Friday. Short the S&P. I've got a lot of short S&P positions. Obviously, that's why I'm up so much money. I've got some short gold positions, which are costing me at the moment because they bounced back towards where I got in, and some of them are actually above where I got in. Let's have a look at gold. I'll tell you why. So when we got down to 1620, I was looking for 1613. It was looking really good. My account was up something like £13,000. So I sort of trebled the account in a few days. Taking too much risk, obviously. But that's kind of something I do because I think I know what I'm doing when it comes to technical analysis. Now, the bounce back came when the Bank of England intervened, bought billions of UK gilts because after the budget, the market collapsed. The gilt market collapsed. UK government bond yields were jumping like 0.5% a day. It was getting crazy. Pension funds were getting margin calls. Right old mess. I'm sure you know all about it, so I won't say any more. Anyway, the government had to step in. They had no choice. The whole system was about to break down. Credit spreads had gone crazy, and the whole market had seized up. There wasn't a single buyer for a single bond anywhere. So the government stepped in, and that seemed to create some sort of I don't really understand why gold has gone up so much, but it has, and it's rallied all the way back to very strong level resistance at 1675, 1680. Now, if you've been following, you'll know exactly why. There's a number of reasons why this is an absolutely critical level. It was the 2021 low. It's the 38.2% fib level from the 2015 low. Obviously we had a bounce back there again a couple of months ago in 2022. So the fact that it broke last week and collapsed, I thought we were going to sink further. So this bounce back did catch me out, which happened a few days ago. But I thought I'm just going to hang on because I didn't know how far it would go. And I thought, well, if it gets to 1675, 1680, I'll sell again. Now, you may have seen on there, I sold at 1674, just a small amount. So I managed to get some off. My actual resistance level was at 1677, 1681. So if you're a subscriber, I hope you jumped in a little bit early like me because we didn't quite get there. We got to 1675. And we backed away nicely now, back to 1660. So the important point, really, the most important point, I mean, that's a big level. The most important point is this huge double top pattern up here. I'm surprised more people haven't seen it. Although I'm on Twitter and I've got some guy talking about a cup and handle. I mean, how is this possibly a cup and handle? I don't know what he's talking about. Absolutely baffled. Anyway, I give up. This to me is a bloody obvious double top pattern, and I've gone on about it for weeks, so you all know about it. And once the neckline to the double top pattern has been broken, that's your sell signal. The fact that that's a massively important level from the fibs, the swing lows, and the 200-week moving average makes it even more important. So it's not a surprise that on the bounce we held it, and I think we're going to back off. I think we're going to dump. That's it. I mean, we should, in theory, the measured target is 400 points lower from 1680. So I mean, in theory, we're going to 1280. I don't know, but we could get to the 500-week moving average, which is down at 1430, 1420. Daily chart, well, we're in a negative trend. All the moving averages are pointing down. What can I say? We didn't quite get to this resistance level on the short-term chart. I didn't think we would. Negative candle on Friday, long upper wick, small red body. I can't say any more, really, can I? Let's have a look at oil. So I am short gold. Let's have a look at oil. Oil is in a negative trend. We are holding the 500-day moving average. Now, I had that as a buy level on my reports during the week, and that worked really well. So if you manage to jump on that trade, good. There's the 100-week moving average coming in around the 500-week moving average. Well, it's a couple of hundred points above it, actually. 78, and this is down, 76.5. So it's 150 points above it. So that's why I had that whole region as a support level. Plus, we've got this 3-month trend line. And if you look at the short-term charts, we've got a 1-month trend line as well. So good support level. Now, we did bounce back to, I'm going to show you my short-term chart. I'll show you the hourly chart. Where is it? Because that's where you can see, no, actually I need to show you the 4-hour chart. Can I get the 4-hour chart on there? Ugh, it's a bit messy, but look. Here we go. There's the 4-hour chart. Now, this shows you why I had a big resistance level at 80. Just take it from me. That's around 83, 83.5. Trend line, 100 period moving average. Fibonacci. So that's my trading band at the moment for oil. Anyway, you know all that if you are a subscriber. I'm going to leave that now. I don't have too much time to go into oil. I just wanted to show you why I picked those levels. Let's have a look at the dollar index and try and get through this in about 20 minutes today, because when I go on and on for half, 3/4 of an hour, I think you will get bored. Dollar index, well, on the weekly chart, very clear. We're in a really strong bull trend. Very, very strong bull trend. A bit of a negative candle out last week, spiked up, pulled back, red body. That might, Twitter's now full of, oh yeah, dollar's going to puke, dollar's gone too far. I just don't see it myself. Look, I'm a trend follower. I wouldn't be getting short the dollar on one weekly candle that's not that negative. Okay, if we're talking about a bearish engulfing candle, then I might be a little bit more persuaded to get out of a long position and maybe even get out of a short position. But right now, I don't see that. I am not going to be getting short, and I'm still long the dollar. I certainly wouldn't be getting out, and I certainly wouldn't be getting short on that one weekly candle. Look, the 100-week moving average looks like it's about to cross up above the 200-week. These are the long-term trends. Massive green candle the week before. What else? So yes, we're overbought on the weekly chart, but look, we were overbought on the weekly chart here, March, April, and May. And look, that was the biggest move up it was the most steep move up for the whole of the bull trend. So, I love these people that say, oh, we're overbought. Oh, how many people have talked about we're oversold on the stock markets? We're severely oversold. Yeah, brilliant. When you're oversold in a bull trend, it's a terrific time to jump into stocks. When you're oversold in a bear trend, you can really lose a lot more money. The market can stay oversold in a bear trend way longer than you can hold onto your long positions. Dollar has got some trendline support there as well. I just think that the dollar will bounce eventually, sooner rather than later. No longer overbought on the daily chart, so that's a good thing. Look, the last time we got overbought was a 4-day pullback and off we went. The market didn't even get oversold because we are in a bull trend. I'm going to jump to Bitcoin, which just doesn't look good at all. I like the odd battle with a Bitcoiner on Twitter. I haven't provoked them much lately, but this doesn't look good. That's really nasty looking head and shoulders pattern there, isn't it? Broke below the 200-day moving average. A week moving average, can't get back above it. This, I think, is a bear flag. I talked about it last week. This, I think, is a bear flag, and we broke below it. We certainly haven't been able to get back above it. Resistance from the bear flag trend line, resistance from the 200-week moving average, resistance from the 38.2% fib, big red candle from there, not managing to recover. I think sooner rather than later, we break below 17,500 and we just continue lower. This just doesn't look, there's just no promise for Bitcoin at all, as far as bulls are concerned. I think the craze is over, and that's all it really was. It was a craze. I don't see a craze restarting in this. I'm sorry if you are long, but I have told you ever since November that it's going down. So I've done my best for you. Look, that's the downtrend channel now. Ethereum, of course, doesn't look too great either. Did try a good run there. We're back down. Not doesn't look maybe quite as weak as Bitcoin, I could argue, but I sure wouldn't be buying it myself. You know, I mean, I love all these crypto guys saying you've got to buy crypto, the world's ending, and blah blah blah. But it's just not working for you, is it, guys? Stock markets collapse, crypto does not go up. Inflation goes through the roof, crypto does not go up. It only goes down. We're now testing the 200-week moving average, which has only just come into being because it's such a new product. It's holding, but you know, it's not for me, this one. Okay, what shall I go on to now? I want to look at stock markets. Right. Stock markets. We're 10 minutes in, 11 minutes in. Hopefully I've still got your attention. Oh, listen, there's some things that I want to mention before I go on to stock markets. I've had a deal whereby if you open an account with my recommended broker, you put $10,000 in, you get all my signals for free. You get my whole premium subscription for free. Don't pay for it. Saves you £200 a month. And some of you have done that, and I know some of you are doing well out of it. So thank you for doing that, and I'm glad that you've found it useful. I want to do something for people who can't afford that. Lots of people are saying I can't afford 10,000, which is fair enough. It's a big chunk of money. If you've got $100, this is what I'm going to do for you. There's a link below in the description box. I'm going to click the link, and you can open the trading account. Stick $100 in. That's not much, especially if you're just getting started. Put more in, obviously, if you want to. But if you put in $100, click the link. You'll see that when you open an account, let me know that the account is open. Let me know that the account is funded, and I'm going to give you a free subscription to the package of your choice. All the packages that I do, the little packages are for either Forex or commodities or stock markets, whatever you want. You can get one of those packages for free. Saves you £50 a month. So I mean, it's pretty good. You stick $100 in, and you save yourself 50 quid for the month, and you get one of my packages. So have a look at that. All the description is there when you click the link. Okay. Moving along to the DAX. DAX is clearly in a bear trend. Didn't break lower like some of the US stock markets, which we're going to have a look at in a minute. Well, it did, but we've recovered. So what do I want to say in this? Look, we're in a bear trend. The 500-week moving average, I don't know whether we bounced just above that because it's the 500-week moving average, but that is the only level of support I can see in the DAX. We're not oversold on the down, on the slow stochastic. We haven't managed to yet get to the 38.2% fib, taking that fib from 2009. So, I think there's more downside. I definitely wouldn't be buying the DAX myself. What can I see on the daily chart? Those are the only levels to watch. And I think we're going to 11,750. That is the 500-week moving average. And I think we will go there. Maybe we'll get to 11,450, which is the 38.2% fib going back to 2009. Look, lower peaks, lower troughs. It's a bear trend. Big red candle on Thursday. Friday inside day. We didn't break the Thursday low on Friday. I thought we probably would. Bit oversold in the short term. I don't see any reason to buy this. Moving averages clearly indicate we're in a bear trend. Let's move on to the FTSE. The buy the dippers are out on Twitter this weekend. Oh, record oversold, record pessimism. We're in a bear trend, guys, and we need to deleverage a ridiculously an economy, a global economy where things just got completely out of control. And now finally central banks and governments realise we actually have to, except the UK government, realise that we actually have to deleverage. We have to actually get rid of some of that debt because inflation has just gone absolutely berserk and it's out of control. So of course we're going to have to go through some pain. Unfortunately, you can't do this and not suffer some economic and financial pain, and it's going to be awful. Some people are going to be in real trouble, probably lose their houses, and I feel dreadfully sorry for them. But it's got to happen. If you've over leveraged and you can't pay your debts, that's what's going to happen. You should have been warned about it probably. Right, FTSE support at 68.05. That's the 38.2% fib. Break that, down we go. We've already broken the 500-day moving average. The weekly chart, we've got the 500-week moving average, which is holding it. The 200-week moving average, the red line. Again, break below 6,800 6,800 is your sell signal. We held above 6,800, and the bulls are in with some sort of chance of a recovery, but it's starting to look like the American markets are breaking lower now. Anyway, we'll start with the market that looks the firmest, which is the S&P. Now, also all over Twitter this weekend is talk of an investment bank going down. Credit Suisse seems to be the favourite. Don't know if I mentioned that earlier in the video. I don't know anything about that, but it will be interesting to see if that happens. What will they do? What will the Fed do? The Fed can't really be seen to, just that's it, right? Okay, we're no longer going to hike rates. We're going to start QE again because the banking system's about to fail. I mean, they can't do that. There's no room. They have to fight inflation. They will lose all credibility. No one will ever believe a word they say again if they crumble at the first sign of an investment bank going down. So it could be very interesting. Now, the S&P broke the previous low. E-mini S&P futures, December futures, 36.39, broke lower. We got to 35.95. This is, as I expected. I've been talking about these markets, it being in a bear trend ever since we broke. Actually, let me just show you the bear flag trend line here. We had a nice revisit to that trend line so we could get short. And then for the last 2 weeks, we've dumped. This was my target, as you know, 200-week moving average. Just at a fairly obvious target. Anyone could have figured that one out. Down we go. I'll take these fibs off. We're in a bear trend. It's obvious. This was the bear flag that I talked about. Well, you can argue whether it's a bear flag or not, but the fact is, once we broke the trend line, revisited it, the market dumped. I didn't pay any attention to the bullish engulfing candle that we got. Now, when was that? Was that the Bank of England action on Wednesday? I think it was. We got a bullish engulfing candle, and I didn't even, well, I may have mentioned it in my reports, but I didn't indicate that was probably the start of a sideways trend or a bull trend, which I would normally do. I just didn't see it. I just didn't think that Bank of England action was the end of the bear market. Unfortunately, that was right. So we've closed at the low of the day, at the low of the week. We broke below the previous June low. I just think that the momentum is building to the downside. Yes, we were oversold on the daily chart. Yes, we've had a record number of retail put buyers. I mean, so what? What does that matter? All these arguments on Twitter. It's just incredible how people think that we're about to make a low for the bear trend. I just don't see it. Maybe I'm completely wrong. You can have a right good chuckle at me if I'm wrong, and then we're up 10% next week because I will be losing money on that. So you can have a right good laugh at me, but I don't see it. I really don't see it. Nasdaq looks even weaker than the S&P. Where's the Nasdaq? Here we go. Okay, weekly chart. Selling into resistance has worked really well. The resistance levels are holding. You've had it on the trade sheet all week. So if you've been doing what I've suggested and selling into into bear market rallies, you've been doing well. I hope you're happy with the levels that I've been picking. If you have, I really would appreciate a comment in the comment box. You'd be doing me a massive favour if you tell me how I've been getting on. And if you haven't been getting on well, then tell me too. I don't want to paint a rosy picture. If you've struggled with a few things, and maybe I can help you with them. But if you found the levels useful and you've been doing well, then please let me know in the comment box. Right, Nasdaq has broken. What was the previous June low? 1136. We got down to 1124. So we're retesting the June low, but this time we've broken the 200-week moving average because, of course, it's a rising moving average. Now, that's not good. I think it's more important that we've broken the 200-week moving average than the fact that we've held the June low. But we could maybe form a double bottom, and that could be the end of the correction. For you bulls that think that there are signals out there that it's the low of the correction, and this is the greatest buying opportunity for a very long time, well, go for it. You need that double bottom to hold. No bullish candle when tested on Friday, and we closed right on that low. So I personally wouldn't be brave enough to buy into a long position. We are oversold on the daily chart. I'm just trying to give you your bull arguments, and I don't want to be biased. I want to give you reasons to be long if that's what you really want to do. I just personally don't think it's a great idea. Now, Dow Jones. Dow Jones. Here we go. Very much broken the June low. That's collapsed. Again, bullish engulfing candle we saw on all three of these US stock markets. I ignored them. I didn't think that they would hold, and thankfully they didn't. I still had us selling into resistance levels, so it's worked. Now, we have broken the 38.2% fib, well broken. In fact, that was the resistance on the bounce this week. The 200-week moving average was there as well. This swing low from June was there as well. all around sort of 29,600, 700. That's why I had that as a sell level. We overran it a little bit, but eventually we puked. Now, we closed at the low of the week, or close to it. This just doesn't give me any reason. The Dow Jones looks the weakest of all of them, but it doesn't give me any reason to believe that we will recover. Now, we've broken the low we've broken the peak of the COVID crash low. So this is where we were just before COVID kicked in and the market dumped. 29,543. We're well below that. Just happens to coincide with the 38.2. Again, you can see why this is a really important level. Previous all-time high, 2022 low, 2021 low actually as well. 200-week moving average. I mean, big level around 29,700, 29,600. Well broken now, and we're almost 100. We're almost 1,000 points below it. So that really is quite negative. Now the S&P hasn't actually even got to that COVID crash peak, the peak before the COVID crash. Where was that? 33. Let's call it 3,400. We're 200 points away from there. So when you think, oh my God, the stock markets have had such a massive move to the downside, we haven't. We're still 200 points above the peak just before the COVID crash. And at that time, I remember thinking, blimey, stocks are expensive. That was over 2 years ago, and 2.5 years ago, and we haven't even got there yet. So I think there's lots of downside. I'll finish off with a 10-year T-note. I talked about 4% being a big resistance level from a Fibonacci perspective when you go back all the way to 1981. So that was a big resistance level, some swing highs and stuff there as well. Swing low here, what was that, in 1998? So it was obviously going to be a big level, 4%. And we've hit it. We've backed off a little bit. I know I know it was a big resistance. I'm going to call it 402 that we got to. Pretty much bang on my little confluence of moving Fibonacci levels here. We've backed away from it. What happens next? Well, let me have a look at some short-term charts. Let's bring in the hourly chart, shall we? So, do we have any negative kind of pattern there? I guess I could argue somehow that there is a lopsided head and shoulders pattern with a neckline here? I don't know. We're holding the 200-hour moving average, so it's obviously not that serious on the downside as far as the correction goes. Anyway, keep an eye on it. But the 4% is the big level. We start getting through 4% now on the 10-year T-note yield, and that could create the next move higher for these 10-year yields. Oh, we've got a bearish engulfing candle, a big one. That came in on Wednesday with the Bank of England action. I think was it Wednesday? I can't remember anyway. It must be, because that was when the big red candle is. And we've engulfed the previous two green candles. So maybe that's it. Maybe 4% will hold. Maybe we'll trade sideways. I don't see these bond yields collapsing, but maybe we will. Look, we're holding the 23.6% fib when you take the swing low from August. So that might indicate that we're going to trade sideways for bond yield. That's it for this week. Quick plug, daytradeideas.co.uk. If you're watching this, I will release this sort of 24 hours, 48 hours after it's been sent to my subscribers for everyone else on YouTube to have a look. So if that's one of you guys and you've not seen my website, daytradeideas.co.uk, please do have a look and check for that offer in the description box below. And please give me your comments. Please like, share, and subscribe.